G'day everyone, welcome to this rundown on global stock markets, and it's been a terrific couple of weeks in Australia and also a really solid week in America as well. So last week was certainly one of the best ones that we've seen for both markets in quite some time. So let's get on and have a look at the action. The S&P ended up gaining 42 points on the week. Very strong finish on Friday, and it set a new all-time high. So that was a real positive for the bulls in the market. There's been certainly some indecision over the last couple of months about which way the market would go. Plenty of people predicting that it was going to break to the downside, but as you'll see from the chart, it's gone the other way, and I've been saying that for many months that I expected 2015 to be at least as strong as 2014, if not more so, and that's the American market that I'm referring to. Now, of course, what's paying off is that very considered stock selection in defined sectors, coupled with a very disciplined entry technique, is working beautifully. It really is delivering quite well. And if you're just looking at the index, it really does miss the main game, because the gains in the strongest sectors and the best stocks within those sectors is significantly, by a long way, in excess of what the index is doing. So don't be caught just looking at the index and thinking that there's not a lot happening in America, because there certainly is. Let's have a look at the chart. This is the S&P 500 index on a daily chart, so you can see the last 2 or 3 days of last week were quite strong in the finish, and the price of the index is now well above the moving average again, as it has been for so much of the last 2 or 3 years. This is the monthly chart, just to give a wider perspective. So the low that we're looking at here is in 2009, so that's the GFC low. And you can see it's been a pretty robust run since the last decent correction we had, which was in October of 2011. It's been a very strong run, and you have to look at that and say there is no change in the trend or the momentum in the American market. Now, just looking at the Australian market, our index was up 57 points on the week, but Friday absolutely blew away the previous 4 mild declining sessions. And if you put the 2 weeks together, because the previous week in Australia was an absolute beauty, and the 2-week gain was a stunning 289 points for the Australian market. Now, of course, what's happened is this is because the RBA has lowered interest rates again, and so money is piling into the higher yielding stocks, coming out of bank accounts and fixed term deposits where it wasn't getting much of an interest anyway, but that's going to be even worse. And the problem is that some of the valuations, in fact, many of the valuations of the banks and other high yielding stocks is getting to silly levels, and it really does present considerable risk. If you're getting 5% on a bank share, but interest rates are going to go up at some point in time, and you're paying absolutely historically high valuations for bank shares at a time when Australian unemployment is rising, when the economy is slowing, the bad debts of the banks are going to start to have to rise again. It's hard to see how they can maintain the growth in dividends that people are banking on. So I think there's considerable risk of capital loss, and it's going to be an unfortunate situation for a lot of people that depend on that income. And this is the real retiree's dilemma, that you can't afford to live on the current fixed interests, but perhaps the risks in going into other areas are a bit high. I'll refer to an alternative at the end of this video, and there's more details coming out shortly. So let's just have a look at the ASX 200, just for the sake of the exercise, not that it really tells us a great deal. But you can see we had an enormously strong week or two prior to last week. We got 3 or 4 days of mild losses, which is pretty normal, bit of a pullback, and then a massive surge on Friday. So we're now certainly at new highs after the 2009 situation, and who knows where the market will continue to go to, but certainly the Australian market does not present any bargains at this point in time, that's for sure. Now, moving on to onto commodities. Gold ended up down $4 on the week, and it finished at 12.29. We're still in this very frustrating phase one zone of indecision that's existed since gold peaked out about 3 years ago. If this is going to be a new bull market, then somewhere near the current levels needs to hold. We can't afford to see too much more downside in gold. Otherwise, I'd be putting the possibility of a new bull market in gold back on the shelf for the time being. The positive is that gold stocks have outperformed the price of gold, and if we look at the HUI index as one indicator of what's happening with gold stocks globally, the pattern is still acceptable for a new bull market. It's still just holding in there. So let's take a look at the price of gold. First of all, this is the daily chart, and you can see there's a couple of Fibonacci retracement levels here. One at 1238, which was broken. The next one at 1218, which so far is held. And the price of gold declined to that level on Wednesday before bouncing back just a little bit. Let's look at the wider view, look at the weekly chart. You can see we're still stuck within this wedge pattern. Hopefully it's just a basing pattern. The way that I'm reading this is that this was a final false break. We had lows here in June of 2013, December of 2013, October of 2014. Then quite often what happens at the end of a very lengthy bear market is that you then get a final break of support. You get a capitulation low. It's a false break. A lot of people throw in the towel, and then the new bull market starts. That's still a possibility, but really gold can't afford to drop much further than it is at the moment. Let's look at the HUI index, and I put this scale on here, these couple of trend lines on here a few weeks ago. I was expecting to see a bit of a pullback. I suggested that the pullback could be to somewhere around about this area. It's exactly where we are right now, but it needs to turn around and start to head back to the upside to confirm that we are in a new bull market for gold stocks. But these are global gold stocks, and certainly in Australia, because the Australian dollar price of gold has gone up, the Australian gold stocks are actually doing better. So we're seeing some pretty resilient performances from the Australian gold stocks. Copper edged up a little bit to $2.61, but it's still way below the range that it's been over the last couple of years. This is really just a bit of a currency effect, not really a move in copper. Crude oil edged up to 53, but my overwhelming read of this is that this is just a bit of a bounce in a bear market. Crude oil, I believe the price will go back down again into the 40s. It's possible could even have a 3 in front of it before we get some sort of final capitulation washout. I expect that crude oil will probably recover during the latter part of the year to perhaps somewhere in the $60 to $70 barrel region, and that would present some opportunities to buy into some energy stocks, but it's certainly not yet. The initial decline has been far too severe for this to be a simple reversal. It's just not going to happen. That's the price chart of copper. So just wrapping up the overall strategic approach, sections of the US market still offer the most reliable growth in the world, and particularly when you look at valuation as well. Yes, the Australian market has done well in the last 2 or 3 weeks, but the valuations are becoming silly with a lot of the stocks. There's still a few good opportunities in Australia, but you've got to be very judicious about how you get into them. So turning back to the US market, there's a variety of processes you can use to make consistent profits in that market. I would strongly advise against chasing yield stocks in Australia at the moment. It's just not a good return for risk. And there are some reliable and profitable alternatives, particularly in the American market. And there's going to be more detail on that coming out in the near term. And particularly for people that don't necessarily want to directly access the American market themselves. So more detail on that shortly. So if anyone wants to talk to me, there's my email address. Always happy to communicate. That's it for this week. And at the moment, the signs are still pretty positive for next week. Speak to you then. Cheers.